Good morning.
Very pleased to be with you guys. Can someone confirm audio and video? Hopefully you can hear us and see us properly. Come on, some engagement. All right, seems like we're good. Well, thank you so much for joining us today. My name is Juan. I'm a co-founder of Darwinex, and standing here on the right side is a very good-looking guy from Estonia.
So my name is Illimar Mattus, and I've recently joined Darwinex as a shareholder and also participating in various activities within the company to grow the business.
Okay, and we have some updates which we announced recently. So we've announced a capital raise for 3 million euros. And the point of today's webinar is to preview on where we come from, because that's important to understand where we're going, and also what we're going to do with that money and how that's going to help our clients, both existing and future.
And then later on, I'm also going to explain why I participated in the latest capital raising round and what's the logic and why I think Darwinex is really about to revolutionize the asset management industry.
Okay, so here's the challenge that got us going a while ago. As you know, my brother's was at the time an aspiring manager, and he faced what we call the wall, in that as a trader or alpha producer, he didn't really even know how to enter this value chain. So, you know, my brother was just like literally outside. He couldn't really enter. And then as we came into this, we even saw that the guys who were in it were also struggling because they don't really make a lot of money from a ton of money that the end investors are paying, because there's a whole bunch of middlemen in here. So for instance, this factory could be the regulatory setup and operations setup that any asset manager needs to have. Then this asset manager sells to some wholesale asset manager, who then sells to the retailer. And by the end of this, the investor has paid a lot of money, very few of which is going to the producer. And that's a problem. That's the challenge we sort of have to solve, both getting aspiring producers into the value chain and keeping or improving the conditions of existing ones. So with that vision, our guiding star then is to remove the barriers for people who have the ability to beat the market, and also help people get to beat the market. Because we know without those barriers, they improve their talent, and that way we can match them with investors in an efficient way. The key word for us is alignment. We think it has to be a win-win situation, because otherwise the long-term situation doesn't work. So that's a bit of background on us. So looking forward at 2021, what we've built is a two-sided marketplace with proprietary tech. The arrangement Darwinex represents is basically we have the producers on the left-hand side. What they do is trade. As they trade, they generate live signals, which they then sell to the Darwinex FCA, regulated asset manager, which acts as the center of a marketplace and places trades for the end investor. The end investor then pays the fees to the marketplace, and the marketplace then buys the IP and closes the signals so that, you know, they can go there. So some highlights on this: it's direct. There's only one middleman in here. It's also aligned in the sense that because the marketplace is accountable directly to both managers and investors, we have to ensure that things go well. For instance, if we don't deliver a good service to the investors, then they'll go away, which will reduce our attractiveness to managers. And then if we didn't treat investors fairly, then they would essentially go away. So I mean, there's a number of benefits to the central marketplace idea. I'm not going to delve into them, but the fact is, over the last years, we've built that. So how is it actually built? First point is the investors actually replicate the positions by the traders or managers. We're not talking about copy trading, because the investors don't get to see the positions to begin with. So you can't really copy anything you don't see. And this is very important, because that way the intellectual property of the trader and manager is preserved. This is something that's unique, to the best of our knowledge, to our setup. This is not something that you achieve with a copy trading setup. As a result of this, because of this signal sales arrangement, the whole situation is regulatory compliant. What we do is the signal providers sell the signals to the asset manager, and that means we extend an umbrella for the signal providers so that they don't have to be regulated as an asset manager. The manager benefits from an efficient setup because he has zero upfront or fixed running costs. Let me just drink a bit.
Take your time.
And most importantly for us, and that's what we call Darwinex, this is survival of the fittest. All strategies can join, all strategies list on comparable risk, and may the best win. That's really the whole idea. It's powering a meritocracy for traders and managers. Yes. So what does the actual marketplace do? Well, for one, there's a proprietary risk control and diagnostic toolkit. So the diagnostic toolkit helps both traders and managers understand how they look in front of the investors. It helps investors make their choice of managers in the marketplace. And then we have a very important independent risk control engine that protects the investors should something go wrong on the manager side. And this is, again, key. So this mirrors the setup where in a hedge fund, the front office takes risks and the middle office controls that, with the added benefit that in this case, the risk control or the middle office or risk management engine reports to a different CEO so that there's no conflicts of interest. Now, the technology is meanwhile 4 or 5 years old, which means we're running it on thousands of customers. It has processed millions of trades. I mean, as a matter of fact, it processes hundreds of thousands per month by now. And we have billions in volumes, which means, you know, this is not stuff that can fail. And then over the last few years, the focus has been on completing the asset universe. As you know, we've always focused at Delta One liquid assets, but we started out in CFDs and rolling spot forex. We have recently added exchange-listed instruments such as equities and exchange-traded funds, and alongside the futures. The focus going forward is also to facilitate the multi-platform. We've migrated to MT5, which is a multi-asset platform. We've now integrated with interactive brokers, which means the entire trader workstation universe is now compatible with us. And we're looking at other platforms to follow, but it's a bit early to announce the names of that. And all this means for the investor that he's got a safe product because of this independent risk control, and also knowing that there's a single phone number they can call. If something goes pear-shaped, for lack of a better word, they know on which phone number to get, which is essentially mine. and that's also an important one because the business, as I'll say, is still founder-owned. So, you know, there's really full alignment from our end as well. The managers are only paid on AUM and success fee, which means that in no way is there any kickbacks of markups of spreads or commission payouts and so on. This means the managers only really focus on delivering upside. There's one interesting point as well in that in addition to being accessible, because the minimum account size we have deliberately kept very, very small, there's a big efficiency in margin requirements in that, for instance, if you were to go to interactive brokers, you would need, on the management platform, you would need one account to replicate each individual manager. Whereas with Darwinex, you can replicate all managers from within a single account. And this results in very efficient use of margin and capital. Again, because the underlying asset universe is liquid, we can be very transparent in providing real-time valuation and real-time liquidity for our investors. And last but not least, and this is a pivot we did a couple of years ago, we only charge wholesale brokerage so that we can pass on all the upside generated by the strategies to the end investors, because that way we hope to get our network effect going, whereby the better the managers, the more AUM, and the more AUM, the better the managers, and that eventually becomes a virtuous circle. So quick run through on the numbers. For those of you who don't know us, my brother and I started the company in 2012 with our CTO. We have since built all our stack on proprietary tech, which has been, on the one hand, expensive, but on the other hand is very, very powerful in the sense that no one but us controls what we do. We don't really depend on third-party providers for any key decisions. From the get-go, we thought regulation. So as a disruptive fintech, we realized to extend the umbrella for our managers, we had to become an asset manager. So we became our own asset manager in 2013. We then also realized the importance of the IP protection, and we realized that every trader needs a broker to meet the market. And that way we basically said, if we set up a broker, if we acquired or created a broker, we would be the only counterparty that our managers need to face. And on that basis, we established our own brokerage operation in 2014. Our team is multinational. We operate out of Madrid and London, and this is a key strength of ours, the fact that we're a multicultural environment. Meanwhile, we have been blessed enough to have customers, traders and investors in 60 countries. So thank you so much for all those who are here. I know many of you have been with us from the very beginning, so this wouldn't be possible without you. And this point is also very, very important. We could have, I mean, there's a big boom in fintech investments right now. Right? So, I mean, I think everybody in the system could raise a lot of venture capital money, but that comes with its own risks in the sense that at that point, potentially the vision-driven nature of the company gets in danger. So from that standpoint, we have really kept the company funded organically, meaning today Darwinex is an operation that pays for 60 payrolls just from its revenues. So we have an infinite time horizon. We don't need to get the next funding round in 12 months or we're gone. No, we have the freedom to continue pursuing our vision. And for my brother and me, that's and the rest of the team, of course, this is priceless. So I've talked about what we've done. So we've built the product. This is what my brother does. By the way, everybody at Darwinex is very committed to the vision. So we have our own pet avatar. So my dearest chimpanzee, my brother Javi, has been and continues to be the person that dreams of the product. Miguel, together with me, was one of the 3 co-founders, and he remains our CTO to date, commanding a team of more than 35 developers and engineers. I'm the guy that tells the story by now, so they've kicked me out of every other function, which also means I can tell stories all day. And last but not least, over the years, we have been blessed also to get a board of advisors with people who really are trusted in the industry and who can also guide our efforts going forward. Now, the one thing that was missing, and we've heard this over and over again, everybody says, okay, you guys are awesome, but no one knows you. So we think it's time now to really take this to the next level, which is why part of the use of funds we are going to talk about the raise today is to really start beefing up our marketing operations, our sales operation, our business development operations, both on a depth basis as well as on a breadth basis and on more countries. And with that said, none of this would be possible without the backing of our dear polar bear. So I'll pass the word to Illimar.
Thanks a lot, Juan. So as Juan already mentioned, so I joined the list of shareholders in the latest capital round, and for those of you who don't know me, so I'm originally from Estonia, so hence the polar bear there, the avatar, but I actually live in Madrid for more than a year. And my background is mostly in the trading and in the financial world. So I've actually traded futures and futures options since 1997. Some periods there were really a lot of success, some not. So as we have a lot of traders joining today, so you know that there are different periods in time and not always successful. But
wait, you didn't get rich quick?
So I originally wanted to get rich really quick, but it didn't happen. But I've always had a passion about trading, about markets, and more than anything, I understand how difficult it actually is to make money on the markets, and hence the services that Darwinex provides are really important for the trading community. So that being said, I have long experience in the private equity, worked with a few VC funds, and the last 10 years I've been actually, so for Darwinex, the brokerage is like a side business. For me, brokerage was like a core business for the last 10 years. And together with my brother, so it's brothers here, brothers there.
Yeah.
So together with my brother and other shareholders, we actually built a global brokerage firm, which primarily is focused on the algorithmic traders, and my area of focus there was growth and marketing. So taking the firm from the inception, when it started from around the kitchen table, literally from my kitchen table.
Was it clean?
We had all sorts of stuff
Okay.
on the table, and so taking it from the kitchen table and eventually growing it to a firm with hundreds of billions of monthly trading volume, with 260 people, and going through all the cycle is some experience from where I actually got some additional knowledge, and I think something that I could perhaps use as well here in Darwinex. And so like recently I've been more active on the private equity front. So I have a family company, Pinorena Capital. We are doing a lot of interesting investments in fintechs, and our primary focus is really to look for companies that more than ever have a very strong management team. And I would actually highlight there that it's not only the strong management, it's also the passion of the management and the founders. And something that we initially saw here also in Darwinex, that the brothers, and there are actually not two brothers, there are three brothers in Darwinex.
By the way, I'm not sure that's always a good idea. it does work, but it's it's not without its own challenges. But it's good fun.
And then of course we are looking at highly scalable businesses with a lot of growth potential, something that can be taken from Madrid and London and expanded globally, and also looking at firms that are very close to IPO.
In particular, I mean, I think one thing that appealed to us as the founders was the fact that Illimar has a very strong background in the Asia Pacific region, which we think is a natural expansion territory for us.
So something I wanted to share on this webinar, and actually that's the foundational reason why I decided to invest into Darwinex, is my personal experience. And together with my brother and some other partners, we actually used to manage capital of friends and family a while ago. And as the business started growing, we eventually came to the idea that, okay, let's launch a fund. And the logic was that we can increase the AUM, hence the revenues. We can become attractive for larger investors, and in general, like, create a long-term business out of this. And we didn't have the structure in place then, and a lot of the larger investors actually expected like strong regulation and real fund structure. And where we really got stuck, us being as traders, is that we didn't have any contacts in the fund admin industry. So we didn't know who to turn to, what to talk about, what angles we have to look. Most people we contacted in the fund admin industry actually never replied to us. It's just to highlight here also that I'm coming from Estonia, and a few years ago, even today, Estonia is not very well known in the industry. It's become now, but not in the past. And what we understood also from this idea that to create a fund was that there's a lot of admin, legal, regulatory tasks that one has to take care of. So if you imagine that you are alone in your office, just with your 6 screens, you have no experience in various this fund admin legal regulatory tasks. So it's an immense hurdle to actually get through these bottlenecks. And also what was really important was that so when we actually starting following these discussions, we started to count the money, how much we would need to invest into this project. It was tens and tens and eventually hundreds of thousands of euros annually. And as we had the business of managing funds of friends and family, we figured out that we would actually need to raise at least 50 million US dollars to reach the break even. And that's counting the performance and the management fees. So eventually, what turned out to be was that we didn't launch the fund, and it was just the hurdles were so high that we just thought that okay, let's focus on trading, and that was really about it. And I think. Probably on this webinar and outside as well, there are hundreds, if not thousands, of talented traders out there in the world that have this aspiration, this dream that they want to launch their fund, get access to capital, have a real fund structure, but because of the hurdles that I went through with my partners, they just don't get there. And hence a lot of investors that would actually want to invest in these strategies, in these traders, they will never get access to these guys.
Yeah, that or they go illegal, which is not a good idea either.
Yeah. So why I invested personal money into Darwinex was as a reflection of the previous slide. So Darwinex solves a lot of key hurdles. And especially it's very low cost market access through DWS and other platforms. But I want to highlight that how I view Darwinex and how most of our clients actually view Darwinex. It's not really a broker. It's an asset management company that has broker as business as part of their overall this structure. It's also really important that Darwinex is really the only counterparty to the trades of the manager. So the clients, nobody outside of Darwinex don't really see the strategies, and hence nobody can reverse engineer the strategies and effectively steal the IP of the trader. And this is really like important thing, and also differentiates Darwinex from a lot of like this. Copy trading service providers that where clients, the end investors, they actually see the trades, and hence they can eventually bypass the trader, and the trader doesn't actually make money out of this. What's really also important is it provides regulatory umbrella to raise and manage investor capital. So coming back to my history, then everything that I wanted to do with my partners in the past, we could have actually reached all of our these goals just working with Darwinex, and which we didn't know at that time. And what's also important is Darwinex has a 90 million euro seed capital program. So it means that effectively for talented traders, Darwinex can be the first investor. So and through this relationship, the seed capital program, investor can start building up their experience and of managing third-party capital, which is also psychological. It's I'm not sure how many of you have managed third-party capital, but psychologically it's a completely different thing whether you manage your own capital or whether there's somebody else out there that has trusted their money with you. So it sometimes even starts affecting the trading activity of the trader. And as Juan mentioned earlier as well, so at Darwinex, the marketplace the company has effectively gives access to third-party capital. It's all within the platform. There are thousands of investors available Also, traders who have their own investors, they can also bring their investors to the platform and hence operate all under a highly regulated, robust, strong umbrella of Darwinex. And not to mention also the risk monitoring and control tools, which were actually the elements of the platform that initially convinced me that holy shit, sorry for my friends, I mean that's really something with what Darwinex outstands.
Like Jesus.
Yeah, I use that. So that really drew my attention. So if you compare Darwinex with any other, let's say, similar product, very often Darwinex is compared with copy trading solutions. There is not a single other provider that has such a robust risk monitoring and controls tools within the platform, which is both good for the trader and for the investor. And there are, of course, some other very important things like NAV calculation, performance calculation, fee collection, all this administrative part for which usually when you launch a fund, you have to hire 1 or 2 extra people. In Darwinex case, it's handled by the platform itself automatically, and the trader doesn't have to deal with this. And there's more to follow. So I think I've already talked too much. Or
it's perfect.
So there's more to follow. So there's opportunity also for very successful traders to launch their own private labels, to brand their strategies, their business under their own brand, and attract their own investors if they want, and all under the regulated umbrella of Darwinex. So there are many interesting things that are on the pipeline, and some of them are already in live mode with some real traders and investors as well. You can now interrupt me.
No. So no. Quick point. I mean, I can see there's lots of questions building up. So don't worry, guys. We're going to come back to them. There's a very interesting one on what are the benefits of Darwinex versus a fund. I mean, hopefully Illimar has touched on that, but we'll come back to that hopefully after we've discussed the main agenda items. So I think we move on now to the use of the capital raise. Essentially, there's 6 points that we're going to touch on. So the first one was to really prepare Darwinex for the next, the next milestones in the evolution. We have an ambitious strategic roadmap to grow the company valuation and then do a pretty big, substantial upgrade for capital raise to take Darwinex really international with kind of the main jurisdictions being Asia and potentially also US. Of course, we always have been a product company, and there's always things that we're missing. I mean, very particularly the asset universe with ETFs, equities, and futures being something which was missing up until shortly. We also know that there are other platforms that the good managers favor, so we are working on that as well to kind of improve that. And then, of course, just continually improving the existing product, which is obviously the focus of any successful organization. As I mentioned before, we are going to start building up our marketing and sales team. There are some regulation elements here because we had to basically handle the Brexit situation, and we added an additional footprint in the European Union. Very importantly, that's been a pretty important milestone in the sense that our entire backend now is multi-entity. So we can now pretty easily add Darwinex APAC or Darwinex US, which could act under their own regulated umbrellas as part of the fintech group, leveraging the entire fintech stack. And then last but not least, Illimar just touched upon a new product line, which is a SaaS or hedge fund as a service product line that we'll discuss in future upcoming webinars. So what are we more specifically working on in the short term? So the strategic roadmap has 3 axes. One is the product axis, then I mentioned before the marketing axis and the business development axis. On the product side of things, we will eventually revamp the Darwinian seed capital program and the way we present that for people to better understand it. We will also improve the onboarding experience. And this has always been a challenge in the sense that I always think of Darwinex as as a diamond that can potentially be a lot of things to different people. So for an emerging manager, it's a way to tap the first seed capital. For an investor, is a way to tap into strategies. For proven managers, it's a direct investing platform, indexing platform that for them to reach out to retail investors. In other words, Darwinex is one thing to 10 different people, and we weren't really always good in personalizing that onboarding experience so that people really understood, okay, I'm an investor, I want to invest in traders. Don't tell me about the trader diagnostic tools or the SaaS platform, because I don't really care about that. That's not my thing. So the second major product element is to complete the tradable universe. We will shortly expand the equities universe in the US. Of course, the operational effort that came with that then offers a very good footprint to expand even to other jurisdictions. We're adding ETFs, we're adding futures, and then of course we have to roll out all of that into the Darwin ecosystem. So we expect us to short-term add equities and futures to the Darwinia seed program. And then after that, we will roll out to third-party capital the way we've always done. Plus, of course, the B2B hedge fund as a service arm that is already in pilot mode. So much for the product side of things. On the marketing side of things, and this one hurts particularly bad because I'm the party that messed it up. It's we have always been primarily a fintech company that became an asset manager first by accident because of the need for us to offer the regulatory umbrella to the managers. And then we also realized that the brokerage angle was a very important one to basically control the entire value chain, protecting the intellectual property. So as a result of that, people started saying, okay, Darwinex is a broker with copy trading. And I just, you don't see it, but my hair is really stood up when I hear that. We're actually, Darwinex is a fintech that happens to own an asset manager and a brokerage business because that's core to reaching its mission. And then part of those regulated operations, we started out with CFDs because that was the easiest way to really test the appeal, to test the technology, and to really see how many Illimars and people like my brother that were out there who were capital constrained. And in that way, the CFD is an ideal instrument because it allows you to really build a proper portfolio without much capital. Unfortunately, as a result of that, we got put into this CFD and FX swamp where people just always distrust what's going on and so on. That's been a major issue. So we're gradually expanding the asset universe so that people don't say, oh, Darwinex is a CFD broker. Well, no, we tested the technology on CFDs. We have a broker to control the entire value chain, and now we're expanding this to the traditional asset classes. So that's so much for the repositioning. So basically, we want our target audience of experienced traders, aspiring managers, and proven managers to come to Darwinex and say, yes, I finally found it. We basically want Illimar to come to our site and say, Jesus, I can hang up to the lawyers and I can just get on straight to Trader Workstation and just do my thing, and they take care of everything else. So that's kind of one thing it's the one thing that's going to make everything easier or unnecessary for us. So it's a big focus. Once that's done, we are going to start inbound content marketing actions like we're doing today, basically reaching out, spreading the word for people to understand what it is we do. And we will target these emerging, so people who really want to manage third-party capital and people who are already managing third-party capital but are still below this 50 million threshold, below which it's really a struggle. I think some people call it the death valley. So you start off, you mortgage to pay hundreds of thousands of euros to set up the fund, and then you hire a bunch of kind of compliance guys and so on. You're underwater and you pray that the performance stacks up until you get 50 million. And then a lot of them just don't make it.
I mean, that's what we were actually dealing with. So we kind of saw when we wanted to launch a fund. So we saw that we actually have to sell everything, mortgage everything, and then put everything into one basket. And then as markets are different, like some years you may have very low, let's say, profitability. and then there's no performance fees. So it's like this ending cycle, like and
Hamster wheel. Yeah.
Hamster wheel. Yeah.
Yeah, and then selectively, I mean, we're never going to be someone to blast out with advertising, but we will start selectively raising our profile. We're doing some advertising for people to understand, raising our brand awareness. I mean, we've done some checks, and yeah, essentially 95% of people don't really know what our offering is, which is both a pain but also an opportunity. So much for the marketing side of things. And then on the business development, so we are starting to build up a Darwinex sales force to basically target key geographies because our growth model has always been organic. So we've really learned in the various markets where we've grown substantially that once we have the first 200, 300 users, then those users then start spreading the word, and that's what makes us grow. Then we're also exploring strategic alliances with aligned partners, and for instance, that includes proven institutional asset managers who have strategies they want to bring to a retail audience and who really value our technology to do that without compromising their intellectual property. So more on that later. And then also, if you're interested in this, we are starting to build a partner network of mission-aligned ambassadors, and by that I'm talking about educators who are not a front for introducing to brokers. I mean, really educators who actually educate, or power users who really love the product and would like to, make some side revenue to actually explain this to new people. So there's something going on here. We'll of course have to experiment and do some mistakes until we find the right model. But we feel the combination of that product marketing and business development axes will prepare us for this strategic roadmap where we really kind of raise money and go all out. So that was it from our side. Of course, now it's the turn for you. But before that, I mean, I have to really extend a beg from the heart. I mean, a lot of people who could benefit from knowing our hedge fund as a service solution would really benefit from hearing about this. So if you think of someone who could benefit from that, it's a win-win for them and also for us to get there. And of course, as we build up our resources, we can invest into making the product better, and then everybody sort of benefits. So thank you for spreading the word.
Just maybe one note that if there are like listeners who have like large communities of around them, like traders or investors, and who want to take part of this movement and expand the word around Darwinex, then do get in touch with us. And I think we have like a lot of interesting stuff that we could do together from the marketing business development side, and help to grow the firm, and also help to grow your business, whichever business you currently have within the trading community or investors community. So we're always open to hear you out and discuss any ways to collaborate.
Okay, so yeah, we'll continue on this note because there's more and more things coming in the next few months, but that we'll talk about in due course. And now it's Q&A time, starting with the different questions that we've been asked by the audience. So I'll try to get now to use my own computer properly. Well, I can't really see all the questions, but there was one which was really interesting from Anis, and I really want to delve into this one. I mean, so much so that I'll probably do a dedicated webinar on that subject. So what Anis's point is Darwinex now takes a cut on the success fee that we pay out to traders, and wouldn't that discourage managers from setting up their own fund? And I've seen our support team already replying to this, but I want to take this one step further. So, because that sort of means some of the points, the key points that we made in this webinar haven't really sunk through. So now let's just run through some numbers. So, Illimar, how much money would have cost you to set up a fund?
I think in the range at that time of 100 to 200K annually. So if you count in all the costs, direct and indirect. So.
Okay, so that's just a setup, and then running costs would have been
in the range of 100 at least.
Okay, so we're talking about end of year one, you're down at least 200K. Plus, I mean, look at me, my hairline is very receding. So, and it is because building a company is a tough thing. So you're down 200K and lots of hours away from your trading, which probably means your performance isn't doing great. Okay, so by that point, you have the astounding amount of zero AUM. Okay, so at the starting point, so you have zero AUM, which means in addition to trading and paying the lawyers and setting up your compliance operation and learning all that from scratch, then you have to also either get a sales guy or go out selling yourself. And then, of course, the last thing that you pay attention to is the trading. Okay, so that's where we are. So now let's run some numbers for the revenues that you make with, say, let's be generous, 10 million euros. Okay, so with 10 million euros, if you manage to charge a 1% management fee, then at best, you're generating 100,000 euros of revenues in management fees. And then, you know, on a good year, yeah, you've got the 10 million euros. And then you have a year with a drawdown. I mean, you can check. We have many successful managers in Darwinex with a 5 to 10 year track record, and everyone and everybody has had a year where things just don't work. And at that point, your AUM just vanished. You're down to 2 million of management fees, and then you're really stressed out. Not for the trading, it's just because you just can't pay all these guys. Okay. So Anis, I think you're doing the numbers backwards in the sense that you say, oh, if I set up my own fund, I can charge 20% success fee. If I go to Darwinex, then I only get 15%. But what you forget about that is that to set up your own fund, in addition to the couple of 100K plus the 100K of running cost, you're going to look at 6 to 9 to 12 months before you launch this thing. Whereas with us, is okay, you come in, you rent an email, you open your Trader Workstation account, and that's all you ever do, because we seat you and we bring capital to you. Now, importantly, the reason, because I don't know how long you've been with us, but we used to not charge or not participate in the success fee because we wanted to be even more attractive than that and basically not keep any success fee. Now, we changed that because investors were telling me, well, me and us, if you don't participate in the success fee, that's because either you don't care about what happens to investors or because no one's making any success. And at that point, we thought, even as a signaling device, we have to participate in the upside of the investors, because otherwise this whole thing is just not credible. So again, business 101, you look at the revenues, yes, headline revenues is 15% versus 20. But then, of course, you multiply that times the AUM, zero AUM for you when you start, 50 million of seed capital plus 50 million of AUM from the get-go on Darwinex side, zero running cost on the Darwinex side, couple of 100,000 euros on the other side. So again, there's a reason why most funds don't make it to 50 million, and I advise you to do the numbers before you say that again.
But I think there was one interesting question earlier about like, so what happens like with the funds, like is Darwinex only the counterparty until the fund reaches 50 or 100 million? And
yeah, by the way, so on that note, I mean, nothing stops you, by the way, sorry, Illimar, nothing stops you from starting out with Darwinex and then launching your own fund operation. And by the way, that is the B2B product that we're offering later. So basically you start out from the ground up, and then as you grow, you continue to be with us because you continue to enjoy basically the technology backend, the compliance umbrella, so that you only ever focus on Darwinex.
I think what's really key, if I may add, for the trader itself is that when a trader manages and raises investor funds with Darwinex, what Darwinex really provides is this the time and comfort for the trader to focus only on trading. Pretty much everything else is handled by Darwinex at a very low, close to zero cost, and that really allows for the trader to focus on trading, and that's something that he does the best. Eventually, when he reaches 50 or 100 that level, that's definitely, a point where somebody can make a decision, what to do next. But I think what's really promising in Darwinex is this hedge fund as a service model, where actually the successful fund trader can launch their own private label and actually continue working with Darwinex under its own brand and with its own investors and become successful independently, more or less. And also, I think what's really important is that coming also from the brokerage industry and a lot of hedge funds, smaller, medium ones, are also facing this issue that if they are counteracting with clearing banks, and if you are not doing really 200K annual commissions, then in most of the cases you are kicked out. You may have very good strategy, but you are just not reaching the threshold that the banks have. It's like 200, 300K annual commissions, and hence you don't have any clearing counterparty. So at Darwinex, since the company does literally billions of trading volume every month, you will never have such issue. So nobody is kicking you out if you're not doing 200K commissions.
And I might add, because we participate in the management and the success fees, we will never tell the manager, hey, why don't you press the button a bit to generate some of revenue? So we are, in that way, we're also not conflict free, because we share from the asset management revenue. As a matter of fact, Darwinex could and potentially will run on third-party brokers. So as we move up the ladder with more and more professional investors, then at some point the balance sheet consumption for us to cater to much larger AUM will just be too much, and at that point we may potentially just be the fintech provider and the asset manager, but not the broker. So that sort of goes to prove that. So there was another very good question, which is, how did you learn all that? So I think Illimar is going to say in a second, but I'm going to say that myself first. So I've always worked in finance, but I was new to the fund management and asset management industry, and also the more general compliance angle. So the way we learned everything here was failing again, and failing again. So you go to a lawyer, you ask him a question, 10,000 euros, thank you very much, and you haven't really learned anything. Okay, next lawyer. You ask the same question, slightly improvement, 10,000 euros, thank you very much. And that way, like the euros fade, time goes away, and eventually you learn the stuff, but it's a possibly deliberately opaque industry, because that way the providers that are already in it get to benefit from this opacity, and that's part of what we're fighting here. As a matter of fact, I don't think we have a lot, if any, online competitors with the way we structure things, but we do have a lot of offline competitors in each. I mean, you go to Germany, I mean, you go to like every second reasonably major financial center, and people have identified the need of these emerging managers. So there are like mini primes who promise capital intro and so on and so forth. And yeah, and that thing is also very expensive, because it's the essential model that I've shown at the beginning, right? I mean, that's essentially this game. That's where they are. I mean, the investors are paying a boatload. The guys in the middle take 90% of it, and by the end of that, the guy who produces the fantastic strategy gets peanuts for it. And yeah, and we just don't like that. So there's another question of, do you have any plan to change current value risk of 6.5 to 10%, as at 6.5 VAR management fee of 1.2 is too high? So we don't have any plans to change VAR from 6.5 to 10%. We actually did offer, I believe it was 20, 10, and 5 in the past, and the 20% VAR was really not a good idea, because it was making people loss averse. They were basically buying the managers on the high and selling them on the low, and that really wasn't good for anybody. When it comes to the 1.2% management fee at 6.5% value at risk, I'm not sure that's too high. I mean, I think most hedge funds run on half, if or 2/3 of the 6.5%. So they would be running on like anywhere between 3 and 5%. And many of them still charge 1.5 or 2. So on that basis, converted, we're actually charging 60 basis points. And anyhow, things are as they are. I mean, we are a business that pays for its own 60 employees, and we have to make our money somewhere. So we pass on the success fee because we think that's the most important for the managers. But because we carry the platform, we carry the regulatory costs, we carry the technology development costs, and so on and so forth. We have to have a recurring revenue base. Otherwise, we would be putting the business, the franchise, and the support platform for many people at risk. So yeah, that was a lengthy answer, but I hope that provides some background. I'm not sure. I mean, I can't actually really see all the questions have been asked because I'm too old by now to use all these platforms. So I can see my own mouse, but I can't really go into the chat window for some reason. So yeah, if anybody has a question that has gone unanswered, I think he can put them again. So there's a question over here by Jesus, and he's asking how much AUM is currently in the platform. So the top manager is currently managing 10 million, and the entire capital available to investors is 100 million right now between the seed and third-party capital. Having said that, a lot of the business development focus, now that the platform is ready and we have the assets and many good managers, is going to go for investors. For the last few years, we haven't really done that, but we're going to start now. Yeah, that's going to hopefully result in a substantial uptick in AUM.
I think maybe one point to add here is that currently there are more than 3,000 various strategies available in the platform. So there's a really wide selection of strategies and within various asset classes as well.
Okay, so there's a question by Illimar. If we have any plans for IBs, for example, if someone introduces AUM to the platform, and the answer is, just reach out to us because we're evaluating different partnership models. Yes, and I think that's something that we could discuss. Then there's a question about when is the asset expansion to 800 stocks and 200 ETFs expected. So the latest estimates right now are either Q4 2021 or early in 2022. The platform is now ready. There are a couple of regulatory matters to be settled and some tests to be done, but equities and ETFs are around the corner.
You missed one question. So Luigi is asking, what is your analysis on the pound yen?
I am not a trader and I wouldn't claim to be one. So yeah, so much for that.
Yeah, I mean, Luigi, Darwinex is not really like a broker, so we don't offer like a lot of brokers offer this market analysis and trade advice. So it's mostly like Darwinex is an asset manager. So we are really after successful traders and with an aim to bring them investors. And so
yeah, it's actually survival of the fittest. So you figure out your own view, both on the trader as well as on the investor side. We don't really provide any kind of advice, and that is a deliberate choice. Okay, I think we've now spoken for the better part of almost an hour. I need a drink of water by now.
My water is empty already.
Yeah. So, I mean, I would like to thank all of you who've been here with us today. I know many of you have been with us for years. And for me, it's quite an experience. I mean, I remember my first webinar on FX Street back in 2014. And I think I wasn't quite alone because we have some employees joining, and there were like a couple of guys who were there, some of whom have actually become employees in the long run. So hi, Jesus. But it's been a long way from now, where we're streaming it live onto kind of YouTube and all these different platforms. So thank you so much. And anybody who comes into this from a new angle, then let us know your questions. As I said, they only let me tell stories by now. So I've got plenty of time to do this, for instance, a webinar on Darwinex versus a hedge fund, or rather Darwinex as the least risky stepping stone onto your own hedge fund. So I've taken good note of that and we'll do it. So yeah, any questions you have on us or anything specific to the industry that you deem relevant, then yeah, let us know and I'll tell you a story.
Thank you, Juan, for having me on this webinar, and thank you all your listeners there for hearing my story, and yeah, thanks a lot.
Yeah, thanks guys. So see you on the next one. To come soon.
Bye bye.
Take care. Bye bye. So let's see if I figure out how to end the stream, which I can't.